Want to know how to make $10,000 a month in the stock market and do it using covered calls and do it on Amazon? I'm going to show you how to do that. If you like the Amazon stock, pay attention. I'm going to show you a different way because we're going to back into this. Now, this is something I normally teach in my classes, my courses, my masterminds, but I'm going to teach you this today because I think it's important to understand how you can take a stock, backwards engineer it to be able to make $10,000 a month, and that's what we're going to do. So let's start by looking at Amazon. So here's the chart on Amazon, and Amazon has got, kind of a great chart. I mean, you can see lower left to upper right. I'm just going to draw a big line here, and you can see that's obviously in an uptrend, right? You can see that's in an uptrend from lower left to upper right. That's what we like. The market's green right now. The stock is green. It's not perfect at the right spot on the chart. I have like 4 cornerstones that I like to use. I like to find the right spot on the chart. Let me tell you, be honest with you, it's not perfect, but sometimes nothing's ever perfect. Like you could just sit there and strike out if you wait for that perfect pitch. So we're going to try to back into this stock and show you how to make $10,000 a month on Amazon. So if you think Amazon's a safe stock or a worthy stock or whatever word you use, I'm going to show you how to do that using covered calls. So what we're going to do is first look at these lines that I drew. So I drew an upper band line. This is a breakout spot, I think, on the chart. So it's obviously a breakout. It's the all-time high at 201.20. So I see a breakout happening there into strength, especially when the NASDAQ recovers here a little bit. Even though we're green, the NASDAQ is the worst performing ETF of the 4 that I watch over the last couple of months. And so you could see Amazon went from 201 all the way down here to 151. That's a pretty big drop. That's like 25%, right? Or something like that. And you can see we had a beautiful hammer candle on high volume. That's textbook right there. That candle right there that went down to 151.61. And then we got a bounce all the way back up above the 200-day moving average, a gap up and a test here at 168.92. And then we've been really trying to build cause to go higher. Now, there was an early entry downtrend that I drew right here, and it was pretty good. On this bar right here on September 11th, we had a beautiful average volume bar, but it broke above the 50, that red line right there, and it broke above that trend line. So now it's kind of like, all right, let's see if it can hang up here and hold it, and it has. It's been up there for going on 3 weeks now. Now, as you continue to go to the right, you're going to see a very high volume candle there. That is a great candle. We like where it closed. It closed at the end of the day at the high. We like having all of this volume. That volume was 141% of its average daily volume. That's huge volume, as you can see from that candle. And so we've got a nice little uptrend in place. Now, for the last 4 days, we've gone down. Now, that is concerning to me, and I'll show you why it's concerning. Well, maybe I'll show you right now. In fact, you may or may not know this, but this has been a big thing out there for the last couple of weeks. Amazon, Apple, and Tesla brace for supply chain disruption as potential East Coast dock workers strike near. So that strike is going to start October 1st. Now, what does that mean? These are the East Coast longshoremen, the people that unload the ships and the containers. These are the guys that take all those TVs and all the goods and all the stuff, and then they put them onto the trucks and then they distribute them around the country. Well, if those guys aren't able to unload the trucks, you're going to have what happened a few years ago during COVID, is you have a backup of inventory that can't get unloaded, and then it can't get distributed. And so you have a couple things happen. Number one, you have a scarcity of a lot of things that you're looking for. So Amazon's like, oh my God, what are we going to be able to sell? So they'll have to find alternate sources or bring them in from the West Coast or New Orleans ports, things like that. But the East Coast ports are going to be closed. Now, if you think that's going to last a long time, then maybe Amazon's not the stock for you. If you think it's going to last a little bit of time and they'll solve the problem, give them their money or whatever because they realize they need them, well, that's going to make Amazon probably pop back up. Now, I don't know if that's the case or not. I'm just trying to play the probabilities. So there are some things here in Amazon that you've got to be wary of. And, nothing in the market is without risk. I just think Amazon's going to, benefit from the fact that they're going to get this thing solved fairly quickly. And if they don't, you continue to collect money from selling covered calls. That's the concept. It's not like we're trying to buy low and sell high on Amazon. We're trying to buy a good stock at a good price at, off the all-time high of 200. We're trying to buy it at 186. Now, the problem is, if these guys go on strike and they stay on strike for a long time, that could affect our Amazon. It could make it go down further. I don't know, maybe. But does the street already know that? Is it already factored in? Probably. Most news is already known way before you and I know it. So I'm looking at this going, okay, maybe we get a little bit of a deal here, but I'm going to show you how the income is what we're after. And if we can get Amazon at a little bit better deal than we would normally get it, where I say buy it on the high, buy it on the breakout, things like that, and maybe we could just hang in there for a couple months until they solve the longshoreman strike, then maybe we get ourselves a really great deal. So here's how that works. So we're going to look at the covered calls. Now, if you don't know what a covered call is, check out some of my other videos on my channel. Maybe I'll put one here if there's something there. Click on that one if you want. But I've got all kinds of things to show you how to do covered calls, and so does everybody else. It's not the question of what happens when you do a covered call, because you could just buy a stock and sell a call against it. It's what do you do after you do that? Like, how do you fix your trade if the market goes against you? How do you use the juice as the strategy? How do you execute your trading plan so you can make your $10,000 a month? That's what we're going to try to do. And so we're looking at this and we see it, okay, look, the stock is at 186.33. The market's closed now. That's where it closed. So I'm giving you the prices of that. And today is September 30th. We're going to look at the options that expire in a month or so. So let's take a look at this option chain. I'm just going to put it out there. And what I'm going to do is I'm going to find the ones that expire in a month. These are the November 1st, right? They go out 31 days. That's about a month. So the stock is at about 186 and change, so 186.33. And so this is an in-the-money option, this 185 here. Now, if I really believe the stock were going to shoot higher, I would probably sell out of the money, right? Or if I thought it was going to go a little bit lower, maybe, and I could do that trade, maybe I'd sell these 180s or these 175s. But I'm going to get the most juice. You see that 774 there? That's the income we're going for. That's $774 per contract, okay? That's income. And that in 30 days, that income is ours no matter what happens. Now, if the stock goes up and the stock goes down, that's a fluctuation in our portfolio. But this income that we're selling covered calls, that's our income. So we say, okay, we want to make $10,000 a month. How do we do that? Well, we take this 774 and we divide it into $10,000. And we say, okay, how many contracts does that mean we have to do? Well, it means we have to have 13 contracts. That's the equivalent of 1,300 shares. 1,300 shares at the closing price of 186.33 is going to cost about $242,229. So for about $250,000, we're going to be able to control 1,300 shares of Amazon, okay? The controlling of that asset is like controlling a house that you buy and then you rent it to somebody. So you own the house and then your job is to find the tenant and make sure they pay the rent every month. It's the same thing we're doing with the stock. We're buying the Amazon stock and then we're finding somebody that we're going to sell the options to. That person's going to give us the money to be able to take our Amazon stock anytime in the next 30 days, but most likely before expiration or at expiration, I should say, for $185. Now the stock is at 186. We want that stock to be at or above 185. Hopefully not too much at or above it, but 185 is a good price. That means we get the full amount of our income. So if you can do that, you get about $10,000 a month. So we're going to go out there and we're going to buy 1,300 shares of Amazon at $186.33 or thereabouts. And then what we're going to do is we're going to sell against that. We're going to sell covered calls. We're going to sell 13 contracts. Right now, those contracts are going for about $905. Okay, so that puts money back into our account. But some of that money is in the money amount. Now, in the money amount means it's going to protect us if the stock goes down. That in the money amount, but it's not money that we really get to keep. The money we really get to keep is the 774. That's what we're going for. So if you look at that little box that's right there to the right, you can see that's about a 4% trade if the stock closes at or above $185 in 31 days. If you annualize that, the computer does it for you, it's a 49.09% return on your money. Now, we engineered this to get ourselves $10,000 a month. That's the goal. This is the way you do that trade, and we backed into it. We engineered back into it to say, how many contracts do we need, which means how many shares do we have to be able to sell those contracts at this price, and we decided that it was going to be 13 contracts, and we back into that, and we get $10,000 a month on Amazon. Now, The caveats I've mentioned. The longshoreman strike doesn't get resolved very quickly, and Amazon loses money, or they have supply chain disruptions. The other problem that I mentioned is that for all of us, when there are prolonged supply chain disruptions, you see inflation. And so if you remember back in 2020, 2021, we had a chip shortage. All the prices of cars went up. The prices of anything that had a chip in it went up. That's been resolved now. But this longshoreman thing could create a problem in another area of the economy. So we could have inflation in certain other areas. So that's not really that important to this trade, but that does affect people's pocketbook, which means people buy less on Amazon, which means over the next several months, Amazon could see a reduced level of earnings. If they resolve this thing quickly, you could see the opposite. You could see maybe a nice pop on Amazon as you sit there and you collect your $10,000 a month. Oh, and I might as well mention, look, I do this every single day with people in my mastermind group. The program is really made up of people that are in a community of like-minded individuals that all want to start to create passive income and are creating passive income. There are people that have done it before you. They're there to help you. I'm there to help you with mentorship. We have courses that show you how to do this inside that program. And then we have a call every Friday. So we go over our strategies. We hold each other accountable. We make sure we're sticking to our trading plans and things like that. If you want to learn how to do covered calls, I highly recommend you get involved in some mastermind group so that you're thinking about this all the time. It's not just a one-off trade. It's a trade that goes on and on. If you're interested in doing that, just go to the website that's listed in the first link below, and we'll figure out a way to get you more information and let you apply to be a part of that program. Anyway, thanks for being here, and I'll see you on the next video. Take care.